Is today the day that crypto breaks out? That's what we're going to discuss in today's show. We'll have a look at all things around the FOMC, what we're waiting for from Jerome Powell, what the stock markets are doing, where gold's at, and what you can expect for crypto over the next 24 to 48 hours. So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Let's get straight into it. Crypto on the weekly still mostly down. If we look on the hourly over here, also still coming down over there. The stock market hasn't done too bad. A lot of the stock market has bounced, but coming into pretty critical levels, which is why I want to have a look at that today. I am taking a hedge short trade, which I'll share with you as well. And that is on the stock market risk to reward. It just makes perfect sense since you're coming into a couple of key levels with a lot of excitement. A lot of the upside, I believe, has been priced in, but not so much of the downside, right? So we have to talk about that in today's show. Today, everyone is waiting to see what the Fed is going to do with the Fed funds rate, and most specifically, the power of the mic, right? What is Jerome Powell going to be saying on the mic? I think that's what you really need to be looking out for. And the reason why is because we kind of already know what's going to happen with the interest rate decision. It's being priced in at almost a 96% probability that the rates are going to remain completely unchanged. No changes over there. And that's why all eyes on the mic, as I posted over here in the tweet. What are we looking for over here? We're looking for the tonality from Jerome Powell. I think that's probably going to drive the next major decision. Dovish hint, meaning, soft speech and kind words towards the rest of the market would be a risk on rally. A hawkish flex where it comes in a little bit more aggressive. You're looking at the markets flinching off of that and possibly a little bit of a pullback or rejection from some key levels. So that's what we need to talk about today. Remember, we have been focused on this for quite some time. We said that ultimately the expectation is if you are coming into resistance, you do need to be careful, right? So if we look at this from Mr. Crypto, he says breaking the Fed is buying another $42 billion worth of 10-year bonds today. QE is here, right? This is going to be a lot of the Twitter narrative and talk that you're seeing coming out. Is it the case, though? Is it the case? Well, yes, they are buying up the 10-year bonds, which is indicative that at least they're supporting their own economy. But when you look at the Federal Reserve's total assets over here, you can see this chart is nothing but down, right? So the balance sheet is still theoretically being reduced. Maybe they'll make some sort of announcement in that speech as to what may potentially come next. But as it currently stands, this chart does remain angled towards the downside, which means it creates a tough environment for assets to rally, right? Which means coming off of low volume, you kind of have to treat any of the rallies with caution. You still have to be a little bit more cautious, right? So if we look at Donald Trump over here, he's alluding to a very big announcement. He said a tremendous announcement is going to be coming out, earth-shattering and a positive development. Those are his words, right? Literally saying truly earth-shattering development for the US. So we'll see what happens over there. Could it be around the trade wars? Is there some sort of resolution between them and China that's coming up? Well, we'll see very, very, very soon. But again, what we do have to look to is a lot of the upside is currently being priced in, around markets of forward thinking. But what about the downside, right? As we do see most of the major stock markets coming into resistance over here. If you look at the Dow Jones, this is quite literally a series of low lows and low highs coming exactly into the pink box where we said you're looking for a little bit of a gap fill that's coming into that region at about 41,500, meeting up with the 200-day moving average, which is currently rolling over. Now, we said we're not necessarily calling for new lows or anything like that, but at the very least, a pullback and a ranging choppy market over there. So that is for the Dow Jones, and you can see the same on some of the Magnificent Seven, right? Like Apple over here. What are you seeing on Apple? Well, ultimately, it's been rolling over. Lower lows and lower highs. I mean, you literally cannot deny that trend. So you would expect that that was the area of interest where the next lower high would form, and you need to buck that trend. How do you buck that trend? Well, you need to see a bit of higher low formations come into play over here with some new volume rising within the market. You'll notice on most of these charts, the volume is still diminishing, right? And the volume is that lifeblood of the market. And without real volume, you have to take all of the rallies as relief rallies, right? So even Paul Tudor Jones, one of the legends of the space, says the stock market will hit new lows even if Trump does cut tariffs by 50%. I'm not calling for new lows or anything like that. I'm just simply looking to see, can we form a high low, right? So that's coming out yesterday, right? You can see published the 6th of May. he basically came out saying he's looking for new lows. So I guess one of the legends of the space is short, while the rest of the retail market participants are now in greed, right? Chasing the pumps into low volume. So you can see the fear and greed index now sitting in extreme greed. And this is also the picture of the QQQ. So from a risk to reward perspective, on the NASDAQ, I'd be looking for something like this. We outlined this way back where we said, watch for the rally. Once this low is printed over here, we outlined the areas of interest, the 50% level, and then the golden pocket, which lined up as a high confluent area because it comes in line with that 200-day moving average, which is now rolling over, right? Starting to angle towards the downside. And we said that was going to be major resistance. So if you were taking the short trade alongside me, I'd be looking at, taking multiple TPs along the way. So the first take profit area is going to be coming into the 0.382 fib level taken from the low to the high. I don't have a marked off on the sheet because I don't want it to be too messy, but 460, then 450, and then I'd be looking to take most of the profits over here at about 433 on QQQ. And we have the same trade set up over here on the S&P 500, right? Declining volume. So you can see all of this low volume over here, no volume breakout as price is rallying into resistance areas over here. Stop loss 5,852. So there it is. We have the trade set up over here. I may adjust the stop loss ever so slightly, but for now, that's my stop loss, 5,860 in a short trade over here on BTCC. For those of you that do want to take this trade alongside me, they're giving you a 10% sign-up deposit bonus. So anything that you deposit over $500, they'll give you 10%. So if you're putting in $10,000, you're getting $1,000, which you can use to allocate into the trade. By the way, if you do experience drawdown or get stopped out, they will be taking the your losses out of that bonus, right? So it's actually real money that they're giving you over there. Also, on top of that, you're getting the SVIP1, which gives you 40% reduction on trading fees if you use this specific link in the description below. So for those of you that do want to short the S&P 500 or any of the other assets with me, remember on BTCC, they have stocks, commodities, and Forex pairs. Then the link is below for those of you that want to claim your sign-up bonus up to $10,000 in sign-up bonuses over there. All right, let's continue. Now, definitely Bitcoin is still in an interesting position. Why? Well, we've seen gold rallying up into price discovery into all-time highs. Yet, if you look at the ETFs, IBIT, right? IBIT is flipping gold ETFs on a year-to-date flow, even after gold's unreal performance as per this tweet over here, which is pretty good, right? That is one good thing. But there are some concerns, right? It seems like the majority of the bid is coming from, of course, IBIT, as well as Michael Saylor raising funds, right? Now, the concern is this, and I think it's very well outlined by Crypto Chase. Shout out to him over here for identifying this. He says, all the buying that occurred from November, I want to remind you that we set in the top around that November-December period, or I guess leading into Trump's inauguration in January. That was the top, but price didn't move much between November and January, right? So all the buying from November 2024, which is near the top, to March 2025, and he says, and we still topped out. We went straight down to $70,000 the very second that Michael Saylor stopped buying for just 2 to 3 weeks. And he says buying every week since, and we can't actually reclaim any meaningful levels, right? It really makes you wonder where we'd be without his bid. And that is the one concerning factor, right? We're seeing low volume within the crypto market, low volume within the stock market coming into resistance. And is this market really just being held up by Michael Saylor? What happens if he stops buying? You can see he's got all these major bids at the top over here. And as per the little red drawing that essentially is put into play over here, that's the key resistance, the big SR flip region that you're looking for. You do want to flip that $95,000 region into support. You want to hold that level. But if he stops for even a day or two, or even a week or two, what happens over here? Do we simply just start to come down? Do we start to fall? I guess only time will tell, right? We have the bearish divergence taking place. Even if Michael Saylor is able to continue to, in a masterful fashion, send price to $130,000, what you're going to find over here is triple bearish divergence, right? RSI and momentum is weaning off. Price is putting in higher highs. Therefore, your upside becomes relatively limited. I think this is a real concern that most people are not really talking about. We're all on the moon mission, right? Well, not all of us, but most of crypto Twitter, most of crypto YouTube are on the moon mission, right? Looking for 400, 500,000. I even saw that tweet come out. I don't know if you guys saw the interview CZ of Binance was interviewed on a podcast, and they asked, what is your end of year price prediction? And he said $500,000 to $1 million Bitcoin price. Guys, that is another approximately 5 to 10x from here. Look, you need to see some major new momentum come into the market for that to happen. Can it happen? Of course, anything is possible. There's always a possibility and probabilities that something like that could play out. But right now, you have to understand that momentum is weaning off. So it doesn't mean you don't play the long side. It just means that you have to be a little bit more cautious, right? One of the criteria we're looking for was 3 candle closes above the 21 weekly moving average with a break of the stop and reversal indicator. And we got exactly that. You can see those stop and reversal indicators have now popped below price, which means they'll be acting as support. And you have broken a lot of the resistance. So that's a good thing, right? That is one of the good things, but we can't deny the fact that maybe this is just being driven as a sailor bid, right? You have to look under the hood, lift the hood of the vehicle to see, are things really, really healthy? And one of the metrics that we look at is volume and momentum. Is there volume and momentum? I think on the weekly, there's an opportunity for momentum to really begin to shift over here. You can see that it's attempting to turn towards the upside. Money flow starting to turn over there. So that's one good thing. But on the dailies, you do still have forms of bearish divergence, right? You have price essentially coming over here, creating those higher lows, and you have your money flow and your momentum oscillators over here on the, let's just quickly go back onto that. There we go, coming down, right? So starting to roll over. So we need to wait for a little bit more of a pullback, right? And you can see if you look at the liquidity below price action over here, it is starting to get strong on the downside. We're trying to suss out where's the liquidity the greatest, because in low volume environments, price tends to gravitate towards those levels, right? Is it above or below price? And we said that over the coming days and weeks, we'll see this slowly unfold. Right now, it's starting to form more underneath price, which means a lot of longs are jumping in alongside the stock market bulls, which is chasing that greed, right? So liquidity, not massive yet, but getting a lot bigger. I'll remind you, just 2 days ago, this was sitting at about $10 million worth of liquidity, now sitting at about 40 million worth of liquidations. If price comes down into $93,000, you're going to liquidate a significant amount of longs. And typically, before you do get the next trending move or next big move, you do tend to see that, right? So daily exchange volume continuing to diminish over here. All this is telling you is that there is not really a sustainable bid in the market or buying until such time as this trend gets broken. High highs and high lows, that's one thing that we're looking for over there. And it also tells you that a big move is probably coming. Again, direction neutral. It could be down to $40,000 or it could be up to $130,000. Low volume contracting Bollinger Bands tell you that a big move is coming and just around the corner. And we'll see if there's anything that lines up with the FOMC. So generally speaking, just for the next couple of days, we still have a slightly bearish bias. Although I would outline that the bulls have undoubtedly been relatively strong compared to what the stock market is doing. They've been holding price action up very, very well. But again, is that just due to a sailor bid? So the areas of interest, if we do put in a pullback today leading into the FOMC, first area of interest is $89,000. I think that's a high probability bounce zone. And then I think the next area of interest is here at about $86,000. I'm not really eyeing out this $82,000. I think that the sweet spot is going to be over here between $86,000 and $89,000. So if you do get a little bit of a flash crash today into the FOMC, I do believe that becomes a buy the dip opportunity with your lows and then a higher low that comes into this region. Remember, we're still in the presence of the bear moon with the next bull moon coming on Monday the 12th, right? Right over here, Monday the 12th. So you want to see that dip occur before then, and then that probably becomes a buying opportunity, higher low, and you're looking for continuation. Low volume is still there, price pressing into the downsloping trend line, attempting to hold that, right? So very interesting positioning over here. If you can start to reclaim $98,000, pretty much you're looking at a big short squeeze. Any of the short traders that are still trying to hold on to short positions over here at that point would be squeezed out, right? I'm still looking at this trade, right? I'm willing to take the risk on the stock market trade, which has been a little bit more clear because the stock market's not really working off of the sailor bid, right? Another chart to be watching out for over here is this, right? The USDT dominance has worked very, very well. Yesterday on the Whale Room live session that we did with the Zoom, we said, looking for long trades off of this. If this does start to break down and you break this upsloping trend line over here, that should position you for some nice longs. And you can see you got exactly that. I'll highlight the area of interest, right? So as soon as you broke that, that was a good opportunity as it broke back up, set in the lower high or lower low, and then broke down, right? And these were the trades that we're looking at. We specifically spoke on the Whale Room session about Solana. Let's just go to this one here. We spoke about Solana and SUI and Hyperliquid, right? And what we spoke about was the deviation back above the Monday low, and you got the full trade, right? Amazing risk to reward, 1 to 4 setup over there. Price absolutely smashed through the Monday high, broke back into the trading range now. Here was the SUI trade. There was also same thing, sweeping back into the Monday low. This one hasn't quite made it all the way to the Monday high, and I haven't even checked on Hype. Let's see what Hype looks like over here. Same thing, right? Beautiful, beautiful trade. In the live session, we're looking for the deviation, got exactly that. Held the Monday low, ran it all the way past the Monday high. So if you are looking for trade opportunities, there you go. You can see a lot of the guys have been profiting from these trades. If you want to jump into Whale Room, this is where it's at, right? Whale Room is where we're dropping all the trade ideas going live. I know a lot of people, have one-sided mentality when it comes to markets, which is generally the up-only market participants. But in Whale Room, we're for real traders, guys. If you're a real trader and you actually want to make money both directions, this is the place for you. We're looking for both longs and shorts, right? We're simply just trading the market. The time for up-only environments is usually at the bear market lows, which if you go back to any of my streams, all you have to do is go and look what I was saying on YouTube over here. Go back onto my YouTube videos, literally scroll back in time and say, hey, what was 𝗪𝗪𝗪 saying between November 2022 and leading into December 2022? Was he mega bearish, looking for low prices, or was he long? I think you'll find your answer over there, right? That was the time for giga bull mode, right? We've literally run 7x on Bitcoin. Now it's trader mode, right? So it's great that we've broken this level. But again, I want to outline that your upside is limited to about 30 to 35%. There it is. If you play out the full upside move, 30 to 35%, which is a normal trade for us, right? In Whale Room, that's a normal trade for us. We do these types of trades all the time, which means we've positioned away from giga bull mode only into trader mode, right? Of course, if this shifts, if we start to see a marked uptick over here in the Fed buying back assets and they go into giga bull mode, we won't bet against the Fed, right? And then we could start to get a breakdown in Bitcoin dominance. Things could start to look really, really, really good at that point. We need the bid of retail to come back, right? And this is probably the best chart if you want to see what the retail buys are doing. Daily exchange volume, 7-day moving average, down only, right? Ever since the highs over there, down only. We want to see environments like this. Look at that 2021 bid, right? If the Fed do reposition, so if we see the Fed starting to buy back assets in a massive way, then we'll probably start to see a base form over here, a nice low form on the 7-day daily exchange volume. And then we should see this radically appreciate towards the upside. And that's where it's long and strong on everything, even leverage long, right? Just pretty much hold on to the bull and let it run. And that's not the environment that we're in right now, clearly, right? We had that beautiful environment already. Is it going to reset and go one more time? Well, I would hope so, right? In terms of the bull runs, you expect that each cycle should become bigger and bigger when it comes to the total cryptocurrency market cap, which means new money should constantly flow in, right? We should start to take out this $150 billion level. I would expect that, for a final top, I'd look for at least like 3x that, right? So about 750 billion in the 7-day daily exchange volume is probably where I'd just like thumb suck and estimate some sort of a major top signal. But could it be that this time is different? It's always possible, right? Maybe we go in for a little bit more pain. As Paul Tudor Jones says, maybe there is a bit more pain and we need to come down just a little bit more. The experts are often wrong, but remember, guys, these are some of the legends in the space. I actually cover some of Paul Tudor Jones' historical returns in Whale School in the live workshops. And I believe he's sitting between 20 and 30% year on year. That's thousands and thousands and thousands of percent accumulated on your account over time, compounded over time, right? Most people can't achieve that. So do you want to fade him? Let me know. Actually, we are running a poll. So you can actually let me know in that poll. Here it is, right? There it is. What happens today after the FOMC? Is it going to be a nothing burger? Is it going to be pumped to the moon, or are we dumping? Look at how evenly split you guys are. 1/3 basically split between each of those. So I think only time will tell. All right, guys, that's it from me. Thank you so much for joining. Appreciate each and every single one of you. Remember, use the BTCC link if you want your 10% sign-up deposit. Your losses come out of that sign-up deposit, by the way. So it's real money that they're giving you over there, not fake money. I'll see you all on the next one. Have a great day, and cheers for now.